Good evening, everyone. Welcome to Closing Comments here on November 25th. Let's jump right into our charts and see what happened in the markets today. First up, we have our February live cattle. We did see a little bit more downside here in the live cattle market today. We had another gap lower once again with this market opening up down there near 205.77. This market trading lower during the first hour of the day, but a little bit of a rally into the later part of the day had this market trading back up around that prior day's limit down move, trying to backfill and take care of some of that inventory left over from yesterday and clean up some of this mess that we've created already this week. Big limit move down to start the week is going to continue to see some volatility here on the short holiday week. Look for this market to try and find its footing down here, try and stabilize a little bit and digest some of this recent volatility on this big limit down move that we had yesterday. This market's going to try and balance out here, find its footing, and we are hitting some oversold levels, so a little bit of a relief rally should be in play here in the next week or two. If this market starts to trade back above some of these prior day highs like today's at 208.80, we could see this thing try and rally back up there into the 215 to 217 area, try and come back up for air after a pretty nasty breakdown here to start the week, and a little bit over 4 or 5, 6 week run here from those all-time highs to these lows back here down near 205. So pretty big breakdown. This market is due for a little bit of a relief rally. Should try and come back up for air, but at the moment this big picture downtrend still remains intact. We expect the sellers to keep on pushing and the bears to keep targeting that $2 mark on some of these front month contracts. Look for the downside continue in the long term, while in the near term we could see a little bit more of a relief rally up back up into these averages come into play in the next few days to weeks to come. January feeders also having a gap lower today as well. Prices briefly testing lower, undercutting that $3 mark here on this January 26 contract, with a low of the day coming in at $299.52. This market did test lower early in the day, but a nice little rally here into the close, cleaning up some of that inventory from that prior day session once again as well. This market pushing back up here into the 306 area at the close of the day. This market also has been pushed down and beat down over the last few weeks and is reaching into some oversold levels, so a little bit of a relief rally would be in play here still. Look for this market to get some bids rolling above today's high, up there around 309.5 to try and rally back up into these declining moving averages. We're going to see some overhead supply here. The sellers are still in control as this big picture downtrend remains intact. A little bit of a relief rally could come into play here in the next couple days and into next week. But at the moment, sellers still remain in control, and we should see any rallies be selling opportunities and this market continue to attack these lower prices. With that limit down move yesterday, we did open the door to some new breakdown levels. We did test that $3 mark here today, but if we continue with some downside after a little bit of a rally, and if we see those sellers start to step back in, look for this thing to keep on pressing down into the high $2 range. Next up, we have our March 26 corn futures. The last 3 days, we've seen this market kind of balancing out here in about a 4 or 5 cent range here between 435 and 440. Constructive action over the last 2 days, looking like we're putting a little bit of pressure up here on that 440 bull pivot. If we look, we can see a pretty heavy concentration of volume getting built up here in this about 436 to 439 and a quarter range. At the moment, we got some equal highs that are looking like they're willing to pop here. If we do get some offers coming in above today's high around that 439 and a quarter mark, look for a little bit of relief rally come into play. This market continues to be pretty sticky here in the 430 to 440 range. Look for a little bit of a bounce here to come into play, but at the moment, not looking for any major upside. We still have a lot of choppy, sloppy action up here around these major moving averages. This corn market doesn't look to be in a hurry to go anywhere. Look for some choppy action to continue. Crude oil prices snapping back today once again, 3 days in a row here of about $59 to $57 trading on this January crude oil contract. This market going back and forth here, continuing to just show some choppy action here in this subtle downtrend that we got. Expect the bears to keep on selling this market lower as we're going to continue pushing down there into the mid 50s. At the moment, we are trading around the low end of this trend channel we've been in for the last couple of weeks. Looking like we're seeing some good rejection from down here near 57 up to 57.38. Multiple days in a row here with some long wicks showing a little bit of buying pressure from the bottom end of this trend channel. Look for this thing to try and rally back up here in a sloppy, choppy fashion into these declining moving averages. Try and find some more resistance up here near $60 and keep the selling pressure on as this crude oil market continues to slowly drift lower. Very little volatility expected. Look for the downside to continue. Equity markets continue to rally here the last 3 days after creating a little bit of a bearish picture over the last couple of weeks. This market had a nice rally back up into the top end of that November 20th range. At the moment, we are testing those highs here in the evening session right around the $6,800 mark. If the bulls are able to keep on pushing here and get a close for this week back above this Thursday's high at 67.91, look for this thing to keep on pushing up here and try and get that uptrend rolling once again. We still have some overhead supply here, and a lot of these mega cap names are still struggling around their earnings ranges. So we aren't necessarily out of the woods yet here, but this 3-day rally we've had so far has been pretty strong, picking up nearly $300 along the way here. So if this market is able to come through and put in a follow-through day in the next couple days, we could see the upside continue and get this uptrend back on track. If this market does turn around up here and we start to run into some more selling pressure here, either late this week or into early next, we could see this thing start to come back down here and slip below these averages once again. At the moment, not a bad time to remain defensive here with this close back above here and a potential follow-through day coming into play. Could be a time to start deploying some more capital to the long side, but we still aren't out of the woods yet. We still have a little bit of overhead supply to chew through. We want to make sure we get that follow-through day to come in before we really commit to any new uptrends. So in the meantime, everyone remain cautious and start looking for good deals out there, but we still aren't out of the woods. Let's wait and see if that follow-through day can get put in, and then we'll go from there. Thank you, everyone, for tuning in tonight. That's all we got for this week. We will be catching up with you guys over the weekend for our Week 48 Market Watch. But until then, enjoy the Thanksgiving holiday. Happy Thanksgiving, everyone. Thank you.